When people think about wealth, they often imagine something complicated. They picture long formulas, complex charts, secret strategies, or insider tricks only a few people know. But Warren Buffett has spent his entire life proving the opposite. He shows that building wealth is not about genius-level intelligence or perfect timing. It is about following simple rules with discipline, patience, and common sense. Today, I want to talk about the simple principles that guided Warren Buffett from a young boy in Omaha to one of the most successful investors in history. These rules are not locked behind closed doors. They are not magical. They are not limited to the rich or the educated. They are available to anyone who is willing to use them. Buffett built his life with ideas that sound almost too simple at first, but simplicity is what makes them powerful. The real challenge is not learning them. The real challenge is sticking to them for years, even when the world tells you to chase quick wins or follow the crowd. Let's begin with the first rule in Buffett's playbook: invest in yourself before anything else. Buffett has said many times that the best investment you will ever make is the one you make in your own skills, habits, and knowledge. Stocks can rise or fall. Markets can surprise you. But what you learn, how you think, and the habits you build will follow you for the rest of your life. Buffett spends most of his day reading, thinking, and learning. He once said he tries to spend at least 5 or 6 hours a day improving his understanding of the world. Not because he must, but because curiosity for him is a lifelong engine. He believes that knowledge compounds just like money. Every book, every idea, every lesson makes you a little smarter than the day before. Over a lifetime, that creates a huge advantage. His second rule is straightforward: live below your means. Buffett never felt any need to show off. He does not buy expensive cars, he does not collect luxury items, and he still lives in the same house he bought in 1958. Not because he cannot afford more, but because he understands something essential. Wealth is not measured by what you spend. Wealth is measured by what you keep. Most people fall into the trap of trying to look rich instead of becoming rich. Buffett avoided that trap early, and it allowed him to save, invest, and grow his money without pressure or stress. He understood that financial freedom comes from keeping your lifestyle simple and your savings high. His third rule is one of his most famous: buy great businesses, not quick opportunities. Buffett does not chase trends. He does not follow the crowd. He looks for companies with strong foundations, honest leadership, and a clear future. He once said he prefers a business so simple that even a fool could run it, because one day a fool probably will. This rule is bigger than investing. It is a life principle. Buffett teaches us to put our time, money, and energy into things that last. Quick wins fade. Strong foundations endure. Another rule that shaped Buffett's life is the importance of patience. He believes money grows the same way trees grow: slowly, quietly, and steadily. You do not dig up the seed every week to check its progress. You plant it, water it, protect it, and wait. Buffett learned early that the world rewards those who can delay gratification. Most people want results today. Buffett is willing to wait years. That patience set him apart from millions of investors who chase the next big thing but grow nothing in the long run. He also follows a rule that almost sounds too simple: avoid unnecessary risk. Buffett says you should never risk what you have for something you do not need. Many people lose everything because they get greedy, impatient, or careless. Buffett avoids anything he does not understand. He stays within what he calls his circle of competence. He does not invest in businesses just because others are excited about them. He waits for clarity. He waits for value. He waits until he understands the game. That discipline protects him from mistakes that ruin others. Another rule Buffett lives by is choosing the right people. He believes the people you surround yourself with will shape your mindset, your choices, and your future. Buffett avoids dishonest people, negative people, and people who chase shortcuts. He looks for honesty, purpose, and character. He often says that you cannot make a good deal with a bad person, no matter how attractive the opportunity looks. That rule has saved him from countless mistakes. Buffett's next rule is deeply simple yet deeply ignored: keep emotions out of decisions. He says the biggest enemy of wealth is not inflation or taxes. It is emotion. Fear makes people sell too early. Greed makes people buy too late. Buffett built his fortune by staying calm when others were panicking and staying cautious when others were excited. He trusts logic over emotion. He follows data more than noise. But perhaps the most powerful rule Buffett teaches is this: let compounding do the heavy lifting. Buffett did not become a billionaire overnight. In fact, most of his wealth came after he turned 60. That is the miracle of compounding. Small gains, repeated consistently, turn into massive results over time. He once compared compounding to rolling a snowball down a long hill. The longer the hill, the bigger the snowball becomes. His advice is simple: start early, stay consistent, and let time do the work. Buffett's life is proof that wealth does not come from luck or complexity. It comes from simple rules practiced for decades. Rules anyone can follow, rules anyone can learn, rules that shape not only financial success but also a life of clarity, purpose, and peace. These principles are not just about money. They are about building a life that grows in value year after year, decision after decision. As Buffett grew older, these simple rules didn't just guide his investments. They shaped the way he lived. To him, wealth was never just about money. It was about freedom. It was about peace of mind. It was about having control over your time, your decisions, and your direction in life. Buffett often says that real wealth is the ability to wake up every morning and do what you love with people you enjoy in a way that feels meaningful. Money is just a tool that helps you reach that point. But the habits that build wealth also build character. They shape discipline. They shape patience. They shape the mindset that keeps you grounded no matter how successful you become. One of Buffett's most overlooked rules is the rule of consistency. He didn't try to reinvent himself every year. He didn't jump from idea to idea. He didn't switch strategies because someone else seemed to be winning faster. He found a method that worked and stuck to it for decades. In a world where people chase new trends every season, Buffett's consistency became a superpower. His success reminds us that you don't need 100 strategies. You need one good strategy practiced for a very long time. Buffett also talks openly about the dangers of trying to impress other people. He believes many people ruin their finances because they care too much about appearances. They buy things they don't need to look successful to people who don't care. Buffett chose a different path. He never let public opinion shape his lifestyle. He prioritized financial independence over social approval. His message is clear: if you want real wealth, focus on your goals, not other people's expectations. Another rule Buffett lives by is the value of time. He understands that time is the one resource no amount of money can buy back, so he uses it wisely. He avoids unnecessary meetings. He keeps his schedule open. He protects quiet time for thinking and reading. Buffett says that busy is the new stupid. He believes that constantly rushing around is a sign of poor planning, not progress. To him, having time to think is the ultimate competitive advantage. It helps him make better decisions, avoid mistakes, and see opportunities others miss. His rule about keeping life simple is another reason he has stayed successful for so long. Buffett avoids complexity. If something can't be explained easily, he stays away from it. He believes that simple ideas last longer, survive pressure, and are easier to manage. This mindset helped him avoid risky investments and financial traps that looked exciting but were built on shaky foundations. At the heart of Buffett's philosophy is a simple truth: wealth grows when you make fewer mistakes, not when you chase more opportunities. Many people focus on making huge gains. Buffett focuses on avoiding big losses. That difference helped him stay consistent while others collapsed under pressure. He also follows a personal rule about gratitude and humility. Despite being one of the richest people in the world, Buffett never acts like he is above anyone. He knows how fortunate he is. He gives credit to the mentors who shaped him, the opportunities he received, and the lessons he learned along the way. Humility keeps him grounded. Gratitude keeps him motivated. Together, they make him a better leader, investor, and human being. Another simple rule Buffett lives by is doing work that genuinely interests you. He believes you should choose a career that feels natural to your personality. When you love your work, you put in the effort without forcing yourself. You improve because you want to, not because you have to. Buffett found joy in reading financial statements and studying businesses. That passion kept him going for decades. His example shows that passion strengthens discipline, and discipline turns passion into mastery. Buffett also stresses the importance of learning from mistakes, both your own and other people's. He says it is far cheaper to learn from someone else's failure than to experience the same failure yourself. He studies history. He studies market crashes. He studies business collapses, not to criticize, but to understand what went wrong so he can avoid the same traps. Above all, Buffett follows the rule of long-term thinking. He built his fortune slowly, decade after decade. He never rushed. He never gambled. He never tried to get rich overnight. His vision stretches far beyond the present moment. That mindset lets him stay calm when others panic and stay patient when others grow restless. He once said that success comes from sitting still while everyone else is jumping around. When you look at all these rules together, you realize something important. Buffett's wealth is not the result of one big breakthrough. It is the result of many small choices repeated thousands of times, choices that anyone can make. Choices that don't require special talent or luck. Most people want fast results. Buffett wanted good results. Most people want big leaps. Buffett trusted small steps. Most people chase excitement. Buffett embraced simplicity. These rules shaped his life, and they can shape yours too. Wealth is not a mystery. It is a pattern, And once you understand the pattern, you can follow it at your own pace. He says it takes 20 years to build a reputation and 5 minutes to destroy it. If you think about that, you'll act differently. To Buffett, reputation is more valuable than money. A damaged reputation can close doors, destroy trust, and limit future opportunities. A strong reputation built on honesty and consistency opens new paths without you even asking. This is why Buffett is careful with every partnership he forms. He believes that character matters more than intelligence, because intelligence without integrity is dangerous. He would rather work with someone honest and average than someone brilliant and dishonest. This belief helped him build a network of trustworthy people who helped him grow his empire without fear, drama, or betrayal. Another rule Buffett follows is stay within your circle of competence. He knows his strengths and weaknesses and does not pretend to understand things he doesn't. If a business is too complicated, he simply avoids it. If an investment requires guessing instead of understanding, he moves on. This rule keeps him safe. It prevents him from taking blind risks, and it saves him from the common mistake of letting pride push him into areas he is not prepared for. Buffett also believes in being bold when the situation is right. Patience does not mean inaction. It means waiting for the right moment. He once said, "Opportunities come rarely. When it rains gold, put out the bucket, not the thimble." Most people freeze when they see opportunity because they are unsure. Buffett prepares himself so well, keeps his mind so sharp, and keeps his finances so steady that when a real opportunity comes along, he is ready to act. His message is simple: prepare in times of calm so you can be bold in times of chaos. Another rule Buffett lives by is keeping emotions away from money. He knows that fear can make people sell everything at the worst moment, and excitement can make people buy things they don't understand. So he stays grounded. He keeps a long-term view. He looks at the value, not the noise. He often says the stock market is there to serve you, not instruct you. That means prices go up and down, but your decisions should stay steady if you know the real value of what you own. One of Buffett's most powerful lessons is the idea of slow mastery. He never rushed to become wealthy. He focused on becoming skillful. He didn't aim to be the richest person in the world. He aimed to be one of the most consistent and rational investors. And over decades, that consistency turned into wealth far greater than any quick shortcut could have achieved. He also believes that luck favors those who prepare. Buffett never pretends that he did it all alone. He openly acknowledges that he was born in the right country at the right time, with access to good education and mentors. But he also reminds people that many others with similar opportunities never reached the same heights. The difference was discipline. The difference was patience. The difference was sticking to simple rules even when the world was shouting for complexity. Another principle that shaped Buffett's life is having a partner you trust deeply. For him, that partner was Charlie Munger. Munger pushed him to think better, aim higher, and invest smarter. Their friendship was built on honesty, directness, and a shared belief in rational thinking. Buffett often says that who you partner with will determine the direction of your life. If your partner is wise, you'll rise. If your partner is reckless, you'll fall with them. Buffett also believes in giving more value than you receive. He looks for deals where both sides benefit. He wants the businesses he buys to feel respected, not exploited. This approach creates loyalty. It builds relationships that last years instead of months. It also shapes a reputation as someone fair, reliable, and reasonable. Another simple rule: avoid debt whenever possible. Buffett understands that debt can create stress, pressure, and panic. He avoids borrowing money for investments. He would rather go slow with his own capital than move fast with someone else's. He believes that the moment you owe money, you lose a piece of your freedom. And freedom is far more important to him than speed. Buffett also speaks often about staying curious. Even at his age, he continues learning, reading, exploring ideas, and asking questions. He never lets his past success convince him he knows enough. This endless curiosity keeps his mind young, his thinking sharp, and his perspective fresh. One of the biggest lessons in Buffett's life is the importance of saying no. He says the difference between successful people and truly successful people is that truly successful people say no to almost everything. They protect their focus. They guard their time. They choose their commitments carefully. Buffett knows that every yes adds responsibility. Every responsibility takes time, and time is too precious to waste on things that don't matter. Buffett's rules are not complicated because life doesn't need to be complicated. He built wealth by respecting basic principles. He stayed patient when others were impatient. He stayed rational when others were emotional. He stayed humble when others got carried away. These rules shaped his life. They protected him from mistakes. They kept him consistent. They gave him clarity. And they helped him build not just financial success, but a life he genuinely enjoys. Another rule Buffett stands behind is never stop improving your judgment. Good judgment is more valuable than money because good judgment protects your money. Buffett sharpened his judgment through decades of reading annual reports, studying businesses, listening to smart people, and allowing time to do its work. He didn't try to be the fastest thinker. He tried to be the most accurate thinker, and accuracy comes from depth, not speed. He also learned early in life that you don't have to be perfect to succeed. Buffett made mistakes. He bought the wrong companies. He trusted the wrong people. He miscalculated. But instead of hiding his mistakes, he studied them. He treated every mistake like a tuition fee for a better future. That attitude allowed him to improve without letting shame or ego slow him down. Another rule that guided Buffett's life is compete with yourself, not with other people. He never tried to beat someone else. He tried to be better than he was yesterday. He knew that comparing your progress to others is a trap. Someone will always be ahead of you in some area. Someone will always seem faster or luckier. What matters is whether you are moving forward. He built a life where the only competition was his own potential. Buffett also teaches the value of knowing what matters and ignoring what doesn't. He doesn't spend time worrying about things he cannot control. He doesn't get caught up in politics, gossip, or drama. He doesn't waste energy trying to predict the unpredictable. He focuses only on areas where he can make clear, logical decisions. This clarity of focus keeps him sharp and prevents emotional exhaustion. Another rule that shaped Buffett's wealth is his belief in owning assets instead of renting time. Most people trade time for money. They work by the hour or by the month. Buffett wanted to build something that grew even when he slept. He invested in businesses. He bought ownership in great companies. He created systems that produced returns without requiring constant effort. This shift from trading time to owning value allowed compounding to work on a much larger scale. Buffett also follows a deeply personal rule: work only with people you like. He knows that life is too short to spend time with people who drain your energy or complicate your day. He wants to wake up excited about who he meets and what he works on. When you like the people around you, work feels lighter. Stress feels smaller. Mistakes become lessons instead of battles. This simple rule kept him joyful even during challenging times. Another powerful rule Buffett teaches is avoid the noise of the world. Markets rise and fall. News headlines panic and calm. Social trends shift faster than ever. Buffett does not let any of this chaos control him. He understands that noise is constant, but truth is stable. He focuses on long-term value, not short-term excitement. He avoids emotional reactions because he knows that noise often hides opportunity. One of his most admired habits is radical transparency with himself. He doesn't lie to himself about weaknesses or failures. He doesn't pretend everything is perfect. He faces reality directly, even when it's uncomfortable. This honesty helps him make clean decisions. It prevents him from repeating the same mistakes, and it builds a foundation of trust with the people around him. Buffett also emphasizes the importance of teaching others. He believes knowledge becomes more valuable when shared. He teaches through letters, interviews, and conversations. He wants people to understand that wealth is not a mystery. He wants them to build better financial habits. He wants the next generation to avoid the traps that destroy wealth. Another rule that shaped his life is keep your circle small but strong. Buffett values quality over quantity. He doesn't try to be friends with everyone. He chooses a handful of people who challenge him, support him, and keep him honest. This small circle protects his peace and sharpens his thinking. He also believes in being predictable in your behavior. Not boring, but consistent. People know he won't make reckless decisions. People know he won't let greed take over. People know he acts based on principle, not mood. This predictability builds trust, and trust is an invisible currency that multiplies opportunities. Another lesson Buffett teaches is take the long view in everything. He plans decades ahead. He doesn't chase fast rewards. He invests in relationships, businesses, and habits that will still matter 10, 20, 30 years from now. He knows that short-term thinking destroys long-term potential. His entire life is proof that the long game is the only game where ordinary people can win big. Buffett also insists on keeping stress low. He believes that stress clouds judgment, weakens discipline, and damages health. He designs his life around simplicity. He avoids unnecessary conflict. He makes decisions slowly and calmly. He doesn't overload his schedule. This stress-free approach gives him clear thinking, long-lasting energy, and a mindset built for the long haul. All these rules, taken together, form a simple idea. Wealth grows when your habits, your mindset, and your daily actions are aligned with long-term value. Buffett didn't build his fortune with secrets. He built it with discipline. He built it with patience. He built it with choices that reinforce stability instead of excitement. And the beauty of these rules is this: they are available to anyone. You don't need millions, you don't need connections, you don't need extraordinary intelligence. You need consistency, you need patience, you need clarity, you need the courage to keep life simple when everyone else is complicating it. As Buffett's career evolved, one rule became clearer than ever: think independently. He never let crowds, trends, or headlines make decisions for him. He believes that if you do what everyone else is doing, you will get the same results everyone else gets. And most people are not wealthy, so he trusts his own analysis. He trusts his own research. He trusts his own judgment. He is willing to be misunderstood for long periods if he knows he is right in the long term. Independent thinking is rare because it requires confidence. It requires patience, and it requires being comfortable with being alone. But Buffett understands that the best opportunities appear when the crowd is wrong. Another rule Buffett follows is don't interrupt the compounding process. Compounding works only if you give it time. Every time you pull money out, panic sell, or chase another idea, you reset the compounding engine. Buffett avoids unnecessary movement. He doesn't jump from stock to stock. He doesn't constantly adjust his portfolio. He lets value grow quietly and naturally. This rule applies not just to money, but also to skills, habits, and relationships. Compounding rewards those who stay committed. He also believes in celebrating simplicity even when others mock it. People have laughed at Buffett for decades for avoiding trendy industries. Some said he was too conservative. Some said he was out of touch. Some said he didn't understand the modern world. Yet decade after decade, the simple approach outperformed the complicated one. Buffett proves that you don't need to look smart to build wealth. You need to make smart choices. Another lesson Buffett teaches is don't fear downturns, use them. When markets crash, most people panic. Buffett becomes more alert. He knows that recessions and downturns create the best opportunities for patient investors. He says, be fearful when others are greedy and greedy when others are fearful. This is not about taking reckless risks. It is about taking advantage of mispriced value. Downturns reveal who is gambling and who is building wisely. Another powerful rule: earn your success quietly and let results speak. Buffett doesn't boast. He doesn't show off. He doesn't flex his wealth. He understands that the loudest people are often the most insecure, while the strongest people let their work tell their story. Silence protects your focus. Privacy protects your peace. Consistency protects your results. Buffett also lives by a habit that surprises many people. He avoids unnecessary complexity in his personal life. He eats simple meals. He lives in a modest home. He doesn't chase luxury. He doesn't complicate his routine. This simplicity keeps him grounded. It frees mental energy for important decisions. It prevents money from becoming a source of stress. Another rule that shaped Buffett's fortune is never depend on just one source of income. He built multiple income streams through investments, businesses, and dividends. He believes that wealth becomes more stable when you are not relying on a single paycheck or a single idea. Diversifying income, not in a chaotic way, but in a strategic way, creates long-term security. Buffett also stresses the importance of not getting swept away by envy. He calls envy one of the dumbest emotions because it gives you nothing and takes everything. Envy destroys peace of mind. It clouds judgment. It makes you chase things you don't even want. Buffett avoids comparing his life to others, even though he is surrounded by people with different lifestyles. He focuses on his own path, his own values, and his own goals. Another life rule Buffett follows is maintain a calm mind in a noisy world. When others panic, he stays steady. When others rush, he slows down. When others get emotional, he gets logical. This calmness didn't appear overnight. It came from decades of making decisions through principles instead of impulses. Calm thinking is a wealth-building skill all by itself. Buffett also teaches the value of living a life that aligns with your principles, not someone else's expectations. He doesn't let the world pressure him into buying fancy things or living a lifestyle he doesn't enjoy. He knows what makes him happy: reading, thinking, working with people he loves, and keeping life peaceful. True wealth is the ability to design your life around your own values. Another rule that people forget is your biggest asset is your reputation for reliability. People trust Buffett with billions of dollars not because he promises the highest returns, but because he consistently does what he says. He makes commitments carefully. He avoids overpromising. He builds trust through small actions repeated for decades. Buffett also believes in avoiding anger. He avoids conflict where possible. He avoids arguments that waste energy. He avoids reacting from emotion. Anger damages relationships, clouds thinking, and distracts you from long-term goals. A calm person makes clearer decisions, and clear decisions lead to wealth. One of the deepest lessons Buffett offers is this: you don't need to live a complicated life to build an extraordinary one. He didn't chase fame. He didn't seek luxury. He didn't build wealth through chaos. He built it through clarity, patience, and discipline. These rules do not just shape money. They shape character. They shape peace of mind. They shape long-term stability, and they shape a life that compounds in value with every passing year. Now there's another rule that people often underestimate. It's the rule of patience in the face of noise. Every day, someone will tell you the world is ending. Every day, someone will claim they've found the next miracle investment. And every day, the market will swing like a person who can't decide whether they're happy or sad. If you let those swings control your decisions, you'll never build anything solid. Wealth grows in stillness, not panic. I've always said that the market is there to serve you, not guide you. When it's optimistic, you can sell to it. When it's pessimistic, you can buy from it. But you should never let its mood decide your future. The real gains come from the discipline to act when everyone else is frozen by fear. Opportunities don't shout, they whisper. And most people never hear them because they're too busy reacting to the noise. Another rule is this: never underestimate the power of your own habits. The small choices you make every day compound just like money does. If you develop the habit of learning a little more each day, saving a little more each month, and avoiding the temptations that drain your future, you'll build a life most people only dream of. You don't need perfection, you just need direction. If someone asked me what separates those who succeed from those who stay stuck, I'd say it's the willingness to be consistent even when progress feels slow. A lifetime of wealth isn't built on one lucky year. It's built on years of steady decisions that seem ordinary in the moment but extraordinary in hindsight. People want excitement. They want fast results. But the truth is that wealth favors the boring. It rewards the person who takes the long view. Let me tell you something that many people don't hear enough. You don't need a high income to build wealth. You need high discipline. I've met people who made millions and lost everything. I've also met people with modest salaries who ended up financially secure because they respected their money and didn't let their ego spend it for them. Wealth is less about what you make and more about what you keep. One more thing. Surround yourself with people who think clearly. Your environment shapes your decisions more than you realize. If you spend time with people who are always chasing shortcuts or taking reckless risks, you'll start to believe that's normal. But if you keep company with people who value responsibility, learning, and long-term thinking, you'll naturally move in that direction too. You don't need a crowd. You just need the right few. And remember this, your biggest investment isn't a stock or a company. Your biggest investment is your own mind. What you know will shape what you do, and what you do will shape what you become. The people who stay curious and keep learning are the ones who adapt. They're the ones who survive changes and benefit from them. Knowledge doesn't depreciate, it compounds. Most people fail financially not because they lack opportunity, but because they lack clarity. They don't know what they want. They spend without purpose. They chase without thinking. And they confuse activity with progress. If you define your goals clearly, your decisions get easier. And when decisions get easier, results get better. Wealth is not accidental, it's intentional. And the rules that guide it are simple, but they require discipline. Save consistently, invest with patience, avoid unnecessary risks, keep learning, think long-term, protect your time, and never let emotions run your financial life. Do these things long enough and the results will surprise you. There's another rule that has guided me for as long as I can remember. Don't let complexity fool you. People love to complicate things because complicated ideas make them feel smarter. But being smart isn't the goal. Making good decisions is the goal. And good decisions come from understanding. If you can't explain your investment in a few simple sentences, you probably don't fully grasp what you're getting into. When I invest, I'm not trying to solve a puzzle. I'm trying to buy a piece of a business that I understand well enough to trust for decades. Most people don't think that way. They treat investing like gambling. They watch the price, not the business. They react to movement, not meaning. But long-term wealth comes from clarity, not speculation. If you focus on owning great businesses instead of chasing great moments, your life becomes simpler. You stop worrying about the daily ups and downs. You stop trying to outguess the market. And you start thinking like an owner instead of a trader. Ownership builds calm, trading builds stress. Calm is where wealth grows. Another rule that shaped my life is this: protect your reputation like it's your most valuable asset, because it is. You can lose money and make it back. You can miss an opportunity and find another. But if you damage your reputation, you've lost a part of your future. Trust is earned slowly and lost quickly. And once it's gone, you spend years rebuilding something you could have protected with a single good decision. I tell young people this all the time. Your character is worth more than your bank account. And ironically, if you protect your character, your bank account tends to grow anyway. People want to work with those who are reliable, honest, and predictable in the best way. It's easy to underestimate the financial value of being someone others can trust. But I promise you it compounds. Let's talk about another simple rule: avoid debt that works against you. Debt can be a tool, but for most people it becomes a trap. When you owe money, your future belongs to someone else. You lose flexibility, you lose control, you lose options, and wealth is built on having options. If you're constantly paying for yesterday, you can't build for tomorrow. One of the greatest advantages in life is the ability to live below your means. It gives you room to save. It gives you room to invest. It gives you room to think clearly, and it keeps you from becoming a prisoner of lifestyle inflation, which traps more people than bad investments ever will. Now let me share a rule that's less talked about but just as important: say no often. The world will give you endless opportunities, distractions, and requests for your time. If you say yes to everything, you lose focus. Wealth is built by doing a few things well, not many things poorly. Every yes is a commitment. Every no is protection. The clearer you are about your priorities, the more your time becomes an asset instead of something that gets taken from you. People often assume that success is about doing more. But in my experience, success is about doing less, more deliberately. Focus is a multiplier. When your attention is divided, your results are diluted. When your attention is concentrated, your results expand. The best investors and the best leaders aren't the busiest. They're the most focused. Here's another rule that has shaped my journey: choose work that matters to you. Not because it sounds impressive, but because you care about it. Passion isn't just a feeling, it's fuel. It keeps you learning when others stop. It keeps you steady when things get hard. And it gives you energy that money alone can't buy. If you do work you enjoy, even the challenges feel worthwhile. Finally, understand this: wealth isn't only about money. It's about freedom. It's about the ability to live on your terms. It's about spending your days doing what matters to you with people you care about without fear or pressure. Money is just the tool. Freedom is the goal. And every rule I've shared leads you toward that goal. There's a rule I've returned to again and again: don't rush. Most financial mistakes come from impatience. People feel pressure to get rich quickly, but real wealth grows slowly. That slow growth is what makes it stable. You don't want money that appears overnight and disappears the next day. You want money that builds a foundation strong enough to support your future. Patience isn't passive, it's an active choice. It means waiting with purpose. It means sticking to your principles when the world tries to push you off course. And it means trusting the process you set even when results take time. The market rewards the patient and punishes the restless. If you learn to sit still while others panic, you're already ahead. Another rule that guided my life: never stop improving your judgment. Results matter, but judgment decides the results. Every decision you make, what to buy, what to avoid, who to trust, how to react, comes from your judgment. And judgment grows from experience, reflection, and a willingness to learn from your mistakes. You won't always get things right. I certainly didn't. But if you treat every mistake as tuition, you'll grow wiser with each one. The goal isn't to avoid errors. The goal is to avoid repeating them. That is how you strengthen your decision-making muscles. Over time, strong judgment becomes one of the most valuable assets you own. Let's look at another rule that many people overlook: stay steady when others are emotional. Money brings out fear and greed faster than anything else. When people see prices rising, they want to jump in. When prices fall, they want to run away. Those emotional swings create opportunities for the few who stay rational. When the market is euphoric, be cautious. When the market is fearful, be curious. That doesn't mean taking wild risks. It means keeping your mind clear and your analysis honest. Emotions distort reality. Logic reveals it. And wealth grows where reality is understood, not imagined. Here's something else I've learned: you don't need to be a genius to build wealth. In fact, being too smart can hurt you if it leads to overthinking. What you need is discipline, common sense, and the ability to follow simple rules consistently. Extraordinary results often come from ordinary decisions repeated over long periods. People underestimate how powerful consistency can be. Another rule I live by: don't compete with others, compete with yourself. If you measure your success by someone else's progress, you'll always feel behind. Someone will always have more. Someone will always move faster. That's a race you can't win. Instead, focus on making your future self proud. Make decisions that put you in a stronger position next year than you are today. That's the real competition. Let me talk about something equally important: financial peace. People chase wealth because they think it will bring happiness. But happiness isn't a number in a bank account. It's the feeling of control, security, and confidence in your future. Money without peace is just stress with extra zeros. Money with peace is what gives you the ability to enjoy life. To build financial peace, live intentionally. Spend with purpose. Invest with thought, protect your time, and avoid letting money become the source of emotional turmoil. It should be a tool that supports your life, not a burden that controls it. And remember this rule: the simplest path is usually the right one. Save a portion of what you earn. Invest in things you understand. Hold for the long term. Ignore the noise. Spend less than you make. Protect your reputation. Avoid debt. Keep learning, focus on the long game. These aren't exciting ideas. But they work, and they work every time. Wealth isn't about luck, it's about habits, it's about discipline, it's about principles that you follow even when it's inconvenient. Anyone can build wealth if they commit to the simple rules that guide it. You don't need perfect timing or special advantages. You just need the willingness to do what others avoid. Think long-term, act rationally, and stay consistent. There's another rule that shaped my life. Understand the difference between price and value. Most people focus on price because it's loud. It moves, it jumps, it crashes, price grabs attention. But value is quiet. It's built from earnings, leadership, durability, and the quality of a business. Price is what you pay. Value is what you own. If you train yourself to see value instead of price, your entire way of thinking changes. You stop chasing trends. You stop reacting to volatility. You stop believing that every movement matters. Instead, you learn to look beneath the surface. That's where wealth is built. Not in the daily moves, but in the long-term strength of what you choose to own. Another rule is this: let time do the heavy lifting. Time is the partner that never complains, never sleeps, and never stops working for you. People underestimate how powerful compounding really is. They think they understand it, but they don't truly grasp what it can create over decades. A small amount, invested consistently with patience, becomes something remarkable. The problem is that compounding works slowly at first. It tests your belief. You put in the effort and expect fast progress, but compounding doesn't reward impatience. The real growth happens later, after years of steady commitment. That's why so many people quit before they see results. They plant the seed, but they don't stay long enough to see the tree. Let's talk about another rule. Don't let fear control your financial choices. Fear is natural, especially when it comes to money. But fear makes people sell at the wrong time, avoid good opportunities, and cling to safety even when it hurts them in the long run. Being cautious is wise. Being controlled by fear is costly. To overcome fear, rely on facts, not feelings. Understand what you invest in. Know why you're holding it. Know what would make you change your mind. And most importantly, remind yourself that temporary declines are part of the journey. A long-term investor must be comfortable with short-term uncertainty. Without that comfort, you'll never experience real growth. Another rule I've followed: keep your life simple. Complexity eats your time, your money, and your peace. People add complication because it feels impressive, but simplicity is what creates clarity. A simple financial life is easier to manage, easier to track, easier to grow, and easier to recover from when something goes wrong. Simplicity doesn't mean lack of ambition. It means removing everything that doesn't matter so you can focus on what does. It's the ability to spend less, invest wisely, and stay calm when others panic. It's choosing a straightforward path instead of a tangled one. Over the long run, simplicity wins. Here's another rule worth remembering: take responsibility for your future. Many people blame circumstances, luck, or other people for their financial struggles, but wealth begins with accountability. You can't change your past, but you can control your decisions from this moment forward. When you accept that your future is in your hands, you gain power. And that power creates momentum. No one will build your financial life for you. Not the government, not your employer, not your friends. You build it by making choices today that benefit you tomorrow. Consistency becomes your ally, discipline becomes your foundation, clarity becomes your map, and accountability becomes your engine. Another simple truth: the person who controls their emotions controls their wealth. The person who controls their spending controls their freedom, and the person who controls their habits controls their future. Wealth is not a mystery, it is a process, and that process is guided by rules that anyone can follow. Even the most successful people don't win every time, but they do the right things consistently enough that the failures don't define them. It's the accumulation of good decisions, not the avoidance of all mistakes, that creates a lifetime of wealth. There's another rule I've relied on for decades: keep your circle small but strong. You don't need hundreds of people influencing your decisions. You need a few people you trust, people who think clearly, and people who make you better. The wrong crowd can ruin your financial life faster than a bad investment. Surround yourself with people who value discipline, honesty, and patience, and you'll naturally rise to their level. Good partners, good friends, and good mentors are worth more than any stock tip. They challenge you, protect you from blind spots, and help you stay grounded when success or failure tries to pull you off balance. Wealth grows faster when you're not fighting unnecessary battles or dealing with unnecessary drama. Keep your environment clean and your judgment improves automatically. Another rule I live by is this: never stop being a student. The world changes. Industries transform. New opportunities appear and old ones disappear. The people who struggle are the ones who think they already know everything they need to know. But the people who stay curious, who keep reading, who keep asking questions, they adapt. And adaptation is one of the most valuable financial skills you can develop. I've said many times that I read most of the day, not because I'm required to, but because learning compounds just like money does. The more you learn, the more perspectives you gain. And the more perspectives you gain, the better your decisions become. Learning might not pay off this week or this month, but it pays off over a lifetime. There's also a simple rule about opportunities. You don't need many, you just need a few good ones. And when a great opportunity comes along, you have to be ready to act. That means having cash available. It means having the confidence to trust your analysis. And it means having the discipline to ignore the crowd. Most people don't miss out because opportunities never show up. They miss out because they're unprepared when the opportunity arrives, or they're too distracted by noise to recognize it. Wealth doesn't come from constant action. It comes from being ready when it matters. Let me share another rule: live with humility. The market has a way of humbling everyone eventually. The moment you think you're smarter than the market, it proves you wrong. The moment you believe you can't fail, it teaches you a lesson. Humility protects you from overconfidence. It keeps your thinking clear and your decisions rational. I've always believed that no matter how successful you become, you should stay grounded. That mindset protects you from making reckless choices. It keeps you anchored to reality. And it reminds you that wealth is a privilege, not a guarantee. Another important rule is to protect your time. Time is the asset you can't buy more of. You can recover money, you can repair mistakes, but you can't get back an hour once it's gone. The people who build wealth understand that time is more valuable than money, because time is what allows money to grow. Spend your time with intention. Focus on work that builds your future. Cut out activities that drain your energy but add no value. And don't fall into the trap of thinking you need to be busy to be successful. You need to be effective, not busy. Here's something many people don't hear often enough. Wealth doesn't require brilliant ideas. It requires sound behavior. The behaviors that build wealth, saving, investing, learning, and thinking long-term, aren't complicated. But they're rare because they require patience in a world that rewards speed and discipline in a world that rewards impulse. The people who win financially are the ones who do the simple things consistently, not the ones who chase the flashy things occasionally. Flashy fades. Consistency lasts. And finally, remember this rule: focus on what you can control. You can't control the market. You can't control interest rates. You can't control global events. But you can control your attitude, your spending, your savings rate, your habits, and your decisions. Those are the levers that shape your financial future. When you control what you can, the uncontrollable becomes less frightening. There's another rule that stays true no matter how the world changes. Don't let short-term discomfort push you into long-term regret. Every wealth-building decision requires some level of patience, discipline, or sacrifice. Saving means spending less today. Investing means locking money away for years. Learning means using time you could spend on something easier. None of it feels exciting in the moment, but the regret of not doing these things is far heavier than the discomfort of doing them. The people who achieve long-term wealth aren't the ones who avoid discomfort. They're the ones who choose the right discomfort, the discomfort of discipline, the discomfort of patience, the discomfort of saying no when others say yes. It's a quiet kind of discipline, but it pays dividends that noise never will. Another rule I've always kept close: understand the seasons of your financial life. Early on, your focus should be on learning and earning. Later, it becomes about growing and protecting. And eventually, it becomes about giving and guiding. Trying to skip seasons creates frustration. Trying to rush them creates mistakes. Let each chapter do its work. In your early years, your greatest asset is not money. It's time. Time to learn, time to build habits, time to let compounding do the heavy lifting. The worst mistake young people make is believing they need big money to start. What they really need is momentum. A few dollars saved today will beat thousands saved later, simply because those early dollars get more time to grow. As you move into the middle stage of life, the rules shift. Now your judgment matters more. Your choices carry more weight. The foundation you built earlier starts to pay off, or expose the cracks you ignored. This is the season where steady habits and clear thinking protect you from unnecessary risks. You're no longer trying to get lucky. You're trying to stay consistent. And eventually, the season comes where you begin to realize that wealth is not only something you hold, it's something you pass on, not just money, but lessons, values, discipline. The rules that shaped your life become the legacy that shapes someone else's. Wealth without wisdom disappears. Wealth with wisdom continues. Here's another rule worth remembering: avoid people who promise shortcuts. Shortcuts almost always cost more than they save. Whether in money, business, or life, quick fixes usually hide long-term problems. Slow, steady progress is less glamorous, but it's far more reliable. If someone tells you that you can skip the process, you can be sure they're selling something you don't need. Be skeptical of anything that requires urgency but offers no clarity. Be even more skeptical of anything that sounds too good to be true. Wealth is built on patience, not pressure. If you're rushed into a decision, it's probably not a good one. Let me share another rule that matters more than most people realize. Financial independence isn't about income. It's about control. You can earn a large salary and still feel trapped. You can earn a modest income and feel completely free. Freedom comes from owning your time, your choices, and your future. That comes from saving wisely, living intentionally, and avoiding the traps that keep people working for the wrong reasons. Another thing I've learned is that comparison is the enemy of gratitude. If you spend your life comparing your finances to someone else's, you'll always feel behind. Comparison steals joy, clarity, and focus. No one else's journey is identical to yours. No one else has your experiences, your values, or your priorities. The only measure that matters is whether you're improving on your past self. And that brings me to another simple rule: aim for progress, not perfection. Perfection slows people down. It makes them afraid to start. Wealth doesn't require perfect steps. It requires consistent steps. You'll make mistakes. You'll miss opportunities. You'll have setbacks. That's part of the path. What matters is that you keep moving forward with intention. Finally, remember that money is a tool. It's not the meaning of life. It gives you options. It gives you peace. It gives you room to breathe. But purpose, relationships, health, and character are the things that make a life meaningful. Wealth can support those things, but it can't replace them. A lifetime of wealth is built on simple rules, and simple rules followed consistently create extraordinary results. There's another rule I've lived by for decades: make decisions based on facts, not emotions. The world is full of fear and greed, and most people let those feelings dictate their financial choices. When fear strikes, they sell. When excitement rises, they buy. But the disciplined investor stays calm. They act only when the facts support it and ignore everything else. Emotional decisions rarely create lasting wealth. Rational decisions do. Another rule: think in terms of decades, not days. Short-term thinking leads to mistakes. It creates stress. It makes you chase trends instead of opportunities. A long-term mindset gives clarity. It allows you to see through temporary noise. It lets you focus on real value instead of fleeting excitement. Time is your ally if you let it work. I've always emphasized this rule: don't invest in something you don't understand. Complexity might seem impressive, but it's often dangerous. If you can't explain a business in simple terms, you probably don't understand it. Stick to what you do know. Master your circle of competence. That focus keeps you safe and builds confidence over the long term. Another important principle: avoid lifestyle inflation. As your income grows, it's tempting to spend more, to buy more, to appear wealthier than you are. But every dollar you overspend is a dollar you can't invest, a dollar that doesn't compound. Wealth isn't about how much you make. It's about how much you keep and how wisely you put it to work. Here's a rule that often surprises people: give more value than you take. In business, in relationships, and in life, generosity pays off, not immediately, but over time. People want to work with those who are fair, trustworthy, and helpful. Reputation compounds just like money. Protect it, build it, and let it multiply your opportunities. Another rule: avoid the temptation of shortcuts. There are no guarantees and there are no easy wins. Anything that promises quick wealth is usually a trap. Steady, thoughtful decisions, repeated consistently, create real results. The long game may feel slow, but it's the only game that consistently rewards patience. I also follow this rule: keep learning every single day. Knowledge compounds the same way money does. The more you know, the better your decisions and the fewer mistakes you make. Never assume you've learned enough. Stay curious. Read widely. Ask questions. The world changes quickly, and staying informed gives you the power to adapt before others even notice. Another principle: protect your mental energy. Avoid unnecessary drama. Avoid unnecessary arguments. Avoid stress that doesn't serve your life. Your mind is your most important asset. Use it wisely. Focus on decisions that move you forward. Ignore distractions that don't. And one of the most important rules: remember why you're building wealth. Not for show, not for comparison, not for ego. Wealth is about freedom. Freedom to make choices. Freedom to spend time as you wish. Freedom to live without fear of unexpected challenges. That clarity of purpose guides every decision you make and keeps you disciplined when others are distracted. Finally, follow the simplest rule of all: consistency matters more than brilliance. You don't need to be the smartest, the fastest, or the luckiest. You need to do the right things over and over again. Save consistently. Invest consistently. Learn consistently. Make small improvements consistently. And over decades, those small, disciplined actions create results that most people never see coming. Another rule that has guided me is this: avoid impulsive decisions. Life will constantly present opportunities, temptations, and distractions. Most of them are designed to make you act fast, buy now, invest now, or chase a trend. But rushing is usually costly. Discipline means pausing, thinking, and acting only when the facts support it. Impulse may feel exciting in the moment, but patience compounds far better over time. I also live by this rule: never underestimate the value of simplicity. Complex strategies, complicated products, and flashy ideas may seem impressive, but they often fail over the long term. Wealth is built on clarity, not complexity. Understand what you own, understand why you own it, and avoid unnecessary complications that do nothing but increase stress and risk. Another rule: focus on things within your control. The market, the economy, and the actions of others are largely beyond your influence. Worrying about them is a waste of energy. Instead, focus on your savings, your spending, your decisions, and your discipline. Control what you can and let the rest take care of itself. A lesson that's been reinforced countless times: avoid envy. Comparing yourself to others is a trap. Someone will always appear to have more, do more, or succeed faster. That comparison steals focus, energy, and peace of mind. Focus instead on your own path, your own growth, and your own opportunities. Measure success by your improvement, not by someone else's achievements. Another rule I follow: use setbacks as learning opportunities. No one avoids mistakes entirely. I've made plenty myself, but mistakes aren't failures if you study them and improve. They are tuition for wisdom. The faster you learn, the faster you grow. And compounding knowledge is just as powerful as compounding money. One more simple rule: avoid debt that diminishes your freedom. Not all debt is bad, but unnecessary debt is dangerous. It limits your options, creates stress, and compounds risk. By keeping debt minimal or non-existent, you protect your ability to act decisively when real opportunities arise. Freedom to move, invest, or pivot is more valuable than any temporary gain borrowed from the future. Another principle: patience in life pays more than urgency. Don't feel pressured by the clock, by trends, or by other people's expectations. Progress happens gradually. Decisions compound slowly. The path to wealth is a marathon, not a sprint. Those who understand this rarely panic. They stay calm. They stay focused. They let time work in their favor. And finally, a rule that ties everything together: live with intention. Wealth isn't just about accumulating money. It's about building a life that aligns with your values, your priorities, and your purpose. Every choice, from spending, saving, investing, learning, and even whom you spend time with, matters. Align those choices and wealth grows naturally, steadily, and reliably. Simple rules applied consistently shape a lifetime of wealth. They protect you from mistakes, clarify your decisions, and guide your actions. You don't need luck, brilliance, or extraordinary talent. You need patience, discipline, and clarity. Follow these principles and your financial life, and your life as a whole, will grow stronger with every passing year. There's another rule that often gets overlooked: save before you spend. It sounds simple, but most people do it backward. They spend first, then try to save whatever is left. That approach rarely works. Saving first, setting aside a portion of income consistently, builds discipline. It ensures that you prioritize your future before the temptations of today. Over decades, those small amounts grow into significant wealth. Another rule: avoid chasing short-term trends. Markets, industries, and businesses change, but most trends are temporary. Trying to follow them creates stress and often leads to mistakes. Instead, focus on fundamentals. Buy what you understand. Hold what has lasting value. Ignore the noise. The long-term winners are rarely those chasing the latest fad. They are those who stick to principles. One rule I've followed my whole life is: avoid what you don't understand. Complexity may seem impressive, but it often hides risk. If a business, an investment, or a strategy is confusing, the best choice is often to walk away. Staying in your circle of competence protects you from unnecessary mistakes. Simplicity is a shield. Understanding is power. Another principle: choose your battles wisely. Life will constantly present decisions, opportunities, and challenges. Not all of them are worth your attention. Every yes is a commitment of time and energy. Every no is protection. Focus on the things that truly matter and let the rest fade into the background. A rule I cannot overstate: avoid greed. Greed clouds judgment, encourages recklessness, and destroys discipline. People chase high returns without understanding the risks. They borrow too much. They speculate. They overcommit. Wealth is built by measured, rational decisions, not by chasing the highest possible gain. Patience, discipline, and restraint create far more lasting results than risk ever does. Another important rule: think long-term. Decisions made with a 10-year horizon are far less stressful and far more effective than those made with a week or a month in mind. Short-term volatility may scare others, but it provides opportunity for those who are patient. Time magnifies value. The longer you hold to smart choices, the greater the rewards. Another lesson I've learned: don't underestimate the power of reading and learning. Knowledge compounds just like money. The more you read, the more perspectives you gain. The better your understanding, the better your decisions. Even small daily improvements in knowledge create enormous advantages over decades. Here's a rule about relationships. Work with people you trust and respect. Your network matters. The people you partner with, hire, and associate with influence your decisions more than you realize. Surround yourself with those who value integrity, intelligence, and patience. Avoid those who thrive on drama, shortcuts, or quick gains. Your circle shapes your outcomes. And finally, remember this: the rules of wealth are simple, but following them consistently is what separates the few from the many. Save consistently. Invest wisely. Stay patient. Avoid unnecessary risk. Keep learning. Protect your time, your mind, and your reputation. Make decisions with clarity and intention. Over time, these rules compound. They create stability, freedom, and a lifetime of wealth. Another rule I've followed for decades: avoid being influenced by the crowd. Most people make mistakes because they follow the majority. When everyone is panicking, they panic. When everyone is chasing trends, they chase. But wealth is built by thinking independently, by trusting your own analysis, and by being willing to act differently when the evidence supports it. Popular opinion is rarely a guide to success. Another principle: protect your mental and emotional energy. Wealth is not only about money, it's about clarity, focus, and calm. Avoid unnecessary arguments, distractions, and drama. Your decisions are only as good as your state of mind. Peace of mind compounds over time, just like money does. Guard it fiercely. One of the simplest but most overlooked rules: live below your means. Don't confuse lifestyle with wealth. People who spend everything they earn, no matter how high their income, will never truly be rich. True wealth comes from the difference between what you earn and what you save. That gap, invested wisely, grows silently and powerfully over the years. Another rule: invest in what you understand. Avoid speculation. Avoid complexity for the sake of appearing smart. The simplest businesses with clear revenue, durable advantages, and competent management often outperform the flashiest ideas. Complexity may impress others, but simplicity earns long-term results. Another guiding principle: avoid impulsive decisions. Most financial mistakes come from acting too quickly, without thought, without preparation. The disciplined investor waits. They evaluate. They act only when the opportunity and the facts align. Impulse may feel exciting, but patience creates real results. Here's another rule: focus on the long game, not the short term. Most people judge their investments by daily or weekly performance. That's a mistake. Wealth is created over years, decades even. Short-term volatility is irrelevant if the long-term fundamentals are sound. Keep your eyes on the horizon, not on every wave. Another principle I've followed: avoid envy. Comparing your progress to others leads to poor decisions. Someone will always appear wealthier, faster, or luckier. But their journey is not yours. Measure your progress against yourself, not the world. Focus on improving your own decisions and habits, and the results will follow. And a rule I cannot emphasize enough: consistency compounds. You don't need extraordinary intelligence or brilliant ideas to succeed. You need steady, disciplined action over time. Saving consistently, investing wisely, learning continuously, and making deliberate choices creates results that few people achieve, even if they earn more than you do. Finally, one of the most important rules: remember that wealth is a tool, not the goal. Money gives you freedom, options, and peace of mind. But the true reward of wealth is the life it allows you to live, the ability to focus on relationships, purpose, and personal growth. Keep your goals clear, your principles firm, and your actions disciplined, and you will build not only wealth but a life worth living.